Hi, this is FX Tango, and this is a video that describes the ES Mini, which is the mini contract for the S&P futures. It's traded at the CME in Chicago, and these are the last couple, 3 days in April. On the 23rd, which was Monday, the market opened way down based upon concerns about European sovereign debt, especially in Spain, and also a new development in the Netherlands. And you can see that this 5-minute chart gapped way down. The E-mini is traded on a 24-hour basis, with the exception of a period of time between 4:15 and 5:15 in the afternoon Eastern. But for the purposes of this chart, I am trying only to capture the 9:30 to 4:15 time frame Eastern, the New York Stock Exchange open hours, because that's the way I created this particular program that runs this indicator, which shows you where the 10-minute opening range was on any particular day. If we back up, we can see that this is repeated each time, and you can see that, for example, on the 19th of April, last Thursday, we had kind of a screwy after day. We went up and reached peak and came down then and broke through that 10-minute opening range, and the balance of the time was spent in a significant downtrend. These lines here represent previous day high and low ranges from weeks before. But in any event, you can see on Friday we had recovered some. We went back up, tested the peak again, and then by the end of the afternoon on Friday we were significantly lower. The orange dotted line is a 63 EMA, the blue is a 24 EMA, and the yellow is a proxy for the T3 that we use in our Forex trading. The T3 is a smoothed moving average. Now what happened, as we said, was that we moved way down over the weekend, and what usually happens when you break out of such a significant drop back is that you do tend to go back and try to close the gaps of the various sessions. If the market had continued to go down, that would have been a very bad sign after a gap down of this magnificent proportion. But the fact of the matter is that it did come back up and attempt to recover some of what it had lost, so that's a pretty decent sign that there's some buying involved. Now, this is a trend line that we drew this morning when we were trading in this range here, going back to the low of the session on Monday, connecting with this particular low. You can see the outer trend line is continuing in this direction. And then as the trend accelerated late in the day on Monday and then continued overnight, we found that we were in a position to draw an accelerated inner trend line as the market moved forward. Now, the early Fibonacci's were actually, oops, sorry about that, we're actually from here to here, and you can see that they were fulfilled. We had this nice move, and we in fact went beyond the 1618. So now we move our chart to this particular level, and we try to incorporate the previous low of that move, and now we were in this particular area, and here was a trend line, the inner trend line, as I mentioned. And what we've been working on is the idea that when you break the trend line, you're likely to cycle back to the other outer trend line. And in fact, that's what basically happened. But in this particular case, too, we're right in sync with our Fibonacci's, because what happened is we had a Gartley reverse move here. As we broke down through the trend line, we pulled back, and then we saw at our level, and that level was actually at the 61.8 in this uptrend, and so that makes sense as well. Until we break down through this particular trend line, we're probably not going to be in a downtrend. Continuation of this, and I would project that between now and the end of the session, we'll probably go back up this afternoon between 2:30 and 4 and maybe retest some of these highs. That's what typically happens. So I just thought it would be interesting for you to see this this version of the trend lines and Fibonacci's on the TradeStation ES platform as well as in Forex.